Saxon Wood's chief market strategist, Sarah Hunt, joins us. So is it the time for Apple to recover its mantle, Sarah, between now and, when it starts releasing all of these new products that we're awaiting?
Well, I think that you saw a large period of underperformance for a while all the other stocks that were so exciting because of AI and people kept criticizing them because of their strategy. I think at the moment that is not the problem for the other stocks, are not the problem for Apple. Apple is now, because it's got a hardware cycle coming and because people still look at it in that way, I think they're looking at AI as something that it can solve. The question is how exactly are they going to solve it? But at the moment, the excitement is not about that right now. And they haven't done to the same extent to their balance sheet what some of the other companies have done in raising cash to spend all that money.
So Apple may be a bright spot in the AI trade, but what do you make of the AI trade? Because as much as, these companies obviously have a real business proposition, they're also really whiplashed by a lot of headlines quite easily. Overnight we saw the Chinese AI startup Moonshot, and now you see the global chip sell-off affecting U.S. equity.
Well, it reminds me a lot, and not surprisingly, of the DeepSeek moment, too, which was like, this is all going to upend everything and everything's going to change. And then the question is, how is they being trained, and is that the same thing? I don't know the underneath answer to all of that. I do think that there was some vulnerability just on how much these stocks had run and what people were pricing in from a linear standpoint about earnings. And I think that there is going to be a question exactly both on the cadence of how fast you can build data centers and how fast everything can be put to work. And it may be that you see a little bit of a slowdown, but you're also seeing companies getting punished for CapEx now, where they used to be rewarded. So there may be a silver lining in the fact that it slows down a little bit. We just have to sort of see how that plays out. And I'm not sure that the question on the business model continues to be, what is it? Is it token prices? Is it this? Is it that? And I don't think we know the answer yet.
No, and we also don't fully know, and maybe investors don't even know what they want. Do they want continued spending, or would they actually in the end prefer if some of these hyperscalers and other companies were a little bit more reticent to spend and maybe pull back on some?
Well, and that's where I think that there might be, it doesn't feel like a silver lining, but there may be in the slowing of a cadence to spend. I think that the debt offerings have not been as well received as some of the equity offerings because there's a limitation there about how much that can run. And I think that there may be some CapEx exhaustion that you're seeing. And if it becomes a more regular cadence that you can say is repeatable as opposed to it has to go up by 40% every year, that might be more acceptable from an investor standpoint. But I think, again, we're in that space where the stocks have run so much, it's not a surprise to see some profit taking. And it's also really, we continue to look for what exactly the business model is going to be and how we can gauge whether or not that ROI is coming in. And I think that question is just going to continue.
Where then are you seeing compelling pockets of growth in this space, other than maybe the AI trade?
Well, interestingly, there's a whole bunch of places that are trying to catch up, right? You're looking at places like healthcare. You're looking at places like financials. You're seeing a big interest in biotechs. You're seeing some very early stage companies either get bought by larger companies and or people are starting to look at that space again. We look at instrumentation in a company like Danaher. We look at cash flow for companies that are managing to thrive in an environment where it's not just dependent on one spending track. And I think that there are parts of the market that have been ignored in favor of the AI trade, and you may see some money start to rotate back into them. There's been a lot of rotation in this market.
And of course, we have to keep our eye on inflation because hostilities have escalated once again.
Yes, and I think that that's also something that there was a big relief when oil prices went down. There were some great CP that we got some very good numbers. There's no stability to those numbers with the price of oil coming back over $80 and getting closer to 90 on Brent. And I think that that's something that the market had decided for itself, and investors had decided that this was going to happen this way, and then it did, and there was some relief in that. And I think there's some real concern now on the inflation front and whether or not that's going to do anything from the Fed's perspective. I think it's hard to raise rates and think that that's going to solve this particular inflation problem, but it doesn't mean that those odds don't change. And as those odds change, that makes investors very nervous.
Certainly the rate hike in July almost pretty priced out of this market, but not potentially for the rest of the year. All right, Sarah Hunt is sticking around with us. We're going to get a quick check of the market before the opening bell. Obviously, equity indices pointing to a lower open.